What happens when the real estate market crashes? That's what we're going to talk about. And the main thing that you need to know about that is how to protect your wealth and what opportunities are available. And we're going to show you how that's done, because I've been in crashing markets and I've been in upward markets, and I can tell you about both. We're going to talk about the causes of the real estate market crash. We're going to talk about the factors that you look for to predict a crash. And I'm going to talk to you about a crash that I went through and how I worked through it. Years ago, when I was first learning about real estate from one of my mentors, Robert Allen, I was driving around listening to his tapes, and he said this statement, and I never forgot it because it rang true. What happens if the market crashes and everything goes down? And his answer was, well, we'll just buy them all back cheaper. I never forgot that, right? Is the market going to crash, and is it going to happen anytime soon? Nobody really knows, but the experts don't think so. I don't think so. I think that it's probably going to be stable. It may soften in 2023, 2024 as we build inventory back up and we have more homes to sell than we have buyers to buy them. But let's say it does crash. Let's say everything goes to hell and the market crashes. What happens? Well, one of the first signs of a market crash is people can't qualify to buy homes. Prices of money, because money is sold, goes up, meaning that the interest rate goes up. And as the interest rate goes up, somebody's ability to qualify for that $300,000, $400,000, $500,000, $600,000 home goes down. So there's less buyers, and that shrinks because their qualifications don't allow them to get to 500. Maybe they can only get to 450 now. That starts to happen right as interest rates start to go up. The Fed has said they're trying to keep interest rates low to help get the economy through the pandemic. And they're willing to allow inflation to creep up a little more than they normally do and not use interest rates to push inflation down. So that means that there's going to continue to be a lot of people who are able to afford homes. But when that happens, when people can't afford homes, that's the beginning of a slowing of the market. The market doesn't just usually go like that. In real estate, it's not like the stock market. Things move a little slower. But in the early 2000 crash and the 2007 crash where the credit markets froze up, things could spiral once they start going relatively quickly when you get a major shift from the number of buyers to the number of sellers. In the crash, everybody wants to be a seller and there's not a lot of buyers. Who often are the buyers in the crash? They're people who have money on the side, and when cash is really needed badly, they're the ones who can come in with the cash sharks, as you may call them, and negotiate to grab properties for quite a bit of value and below market value, because whoever's selling it needs that cash right now. The other thing that happens before a crash, or when a crash happens, is you're going to see news things about the market is softening, there's more listings, there's more property on the market, inventory is rising. I talked about another video, days of inventory in Phoenix, where it's normally 6 months. So if you have a very low inventory, like in Las Vegas where I am, we've been through a number of cycles, and in 2012, 2013, 2010, 2011, the market was just way down from a lot of speculators buying there who then just weren't able to maintain the property. They lost their value and it wasn't a lot of people to rent them. Today, 9 years later, the market's on fire, right? So your ability to have a prediction of when the market's going to crash and what happens starts with looking at the increase in inventory, looking at increased interest rates. People start talking about it, and it may not be in the whole country. It can be locally. Another thing that happens when the market crashes is the banks start trying to do more workouts with people. The banks want cash flow to come in. They don't want the houses, okay? If you're hearing about banks doing more and more workouts with people, that may be a sign that a crash is coming. Another thing that can cause the market to crash, and what happens during a crash, is when people panic, okay? Panic and fear can create market crashes. You see that often in things like cryptocurrency, the stock market, or other things where everybody's like, I want to get out because value may go down quickly. When everybody wants to sell, that's a problem. What we see in real estate typically is that if there's a major event, one was, some of you may or may not remember this, when wars are started, like the Gulf War, that affected the real estate market. At that time, during the Gulf War, I was buying a home for $1.6 million up in Northern California, a beautiful 4,500 square foot home. These homes were beautiful, but they were selling slowly because people were uncertain about what was going to happen because of this Gulf War. Uncertainty happens right before a crash. When people are uncertain, that's another sign of a crash. Now, what about an actual crash? What goes on? Typically what happens is banks begin to foreclose on properties and they take them back. Now, in some states, if you have a number of foreclosures, they will sell them at the auction, or now today, they'll list them online to get rid of them as quickly as possible. Last time in Vegas that we had a crash, we had a lot of hedge funds buying property and just renting them out and holding on to them. And that turned out to be a very good investment. The reason they did that was because exactly what I talk about, the price per square foot. You're talking about homes that cost $200,000 to build that we're selling for $120,000, $130,000, $80,000, $90,000. Today those homes are $350,000, $400,000, $450,000. So they came in with cash, bought, and rode the market out. Real estate is cyclical, okay? It's going to go up and down. And during a crash, there are a lot of people who are selling and not a lot of people buying, and people starting to flee to rent. So sometimes during the crash, you'll actually see rents going up because people are losing their homes and they needed a place to live. So now we have more renters to rental property, right? So sometimes you'll see that as well. Don't forget to subscribe to my channel so that I can help you learn to earn. I've been doing this for many, many years, 3 decades, and been through the highs, the lowest, the lows. And I can tell you that information in real estate, tax law, it changes on a regular basis. So you want to subscribe because I'll be talking about these things on a regular basis and you'll get up to the date information. You don't have time to do all this stuff, okay? I don't have time to fix my own teeth. I go to the dentist. If you want to learn about real estate, come join my channel and I'll have information for you on a regular basis. May help you make thousands, may help you save thousands, may help you from, as I often say, sometimes the best deal in real estate you ever made is the deal you didn't do, okay? You went to do this deal, you didn't do it, and in hindsight, it was good that you didn't. So please join. In the early 1990s, the market had crashed, and properties were being sold for pennies on the dollar, and there was lots of them, and not a lot of people who wanted them, especially in areas that were challenged neighborhoods, as I would call them, where there was crime, there was break-in, homes were boarded up for sale. And I remember I bought this home in Oakland. It was a Victorian built in the late 1800s. It was a 2-bedroom, 1-bath, and 2-bedroom, 1-bath Victorian home. I bought it for $12,500. When the market crashes, it creates opportunities that are absolutely phenomenal. That place today on Zillow, that same place, I drove by it about 6 months ago, was valued at over $700,000. So from $12,000 in 1992, 93, 94, whenever I bought it, somewhere in there, to $700,000. When the real estate market crashes, remember that it creates massive opportunity, which is why you always want to have, as some of my friends say, that dry powder, that extra cash sitting there to be able to grab some of these opportunities and make money. I bought portfolios of properties for, $1 million. It was 11 or 12, I think it was 12 property portfolios. Those properties today are worth probably $5-6 million more than I paid. Homes that I paid $70,000, $80,000, $90,000 for in a crash, today in that same market sell for $300,000, $400,000, $500,000, $600,000. If you think about, 1998 and 2021, what are we talking, 23 years? All right, if you're 20, 30 years old, in 20, 30 years, these properties that you're grabbing will be worth potentially a hell of a lot more money because why? Land is more, cost of construction's more, there's limits on where you can build, there's limits on sewer capacity. So you want to make sure that you're ready, and we're going to talk about that next in the next video. When is the real estate market expected to crash?